Hi guys, so when I made my top US stocks video, you guys asked for me to make a similar video for UK stocks. So I've spent a bit of time doing some research and I'm going to talk to you about the top 5 UK dividend stocks. As always, a quick reminder, I am not a financial advisor, so please don't take any of this as financial advice. This is just my research and thoughts, and if you're going to invest into any of these companies, do make sure you do your own research. What I'm going to do is talk to you about the dividend and any sort of red flags that they might have and whether or not I would personally invest, i.e. whether I've invested already or whether I'm going to add it to my watch list for potentially investing in the future. So the first company we're going to look at is Polar Capital Holdings. They are a publicly owned investment manager with a dividend yield of 5.4%. Now, if we look at the analysis here, they are currently estimated to be undervalued and their earnings are forecast to grow about 10% per year with no risks detected from the risk checks. So this does seem like a fairly decent investment. As you can see here from the financial position analysis, their assets far outstrip their liabilities in the short term and in the long term as well, which is a really good financial health. Essentially, you can see here that they pass every single one of the 6 analysis checks for financial health. So their assets far outstrip their liabilities and they are debt free. The one thing I'd like to mention is that this is just a very high level analysis here. There are of course other things that you should look at if you do end up wanting to look into one of these companies, and you know, there might be reasons behind things. So if I say that a company has a lot of debt, for example, yes, there may be reasons for it. So as an example, in the US stock market, you know, AT&T has a load of debt at the moment and it's because they took on another company. So yes, there may be reasons for it, and I'm not going to delve into any of that because otherwise this video would be like an hour long. So, oh, there's my cat, don't mind the cat. And yeah, so basically this is just a very high level analysis to give you some ideas of potential stocks to look at. They are in the top 25% of dividend payers in the UK. In terms of my own opinion, I do think I will be adding this to my watch list because I haven't invested in it yet, but I'm definitely interested. So it's going to go on my watch list and I'm going to do some more research and perhaps you'll see it in one of my future portfolio updates. So the next company is Phoenix Group Holdings with a dividend of 5.99%. Again, they are in the 25% of the top UK dividend payers and they have had really stable dividends for the last 10 years. They are a closed life assurance fund consolidator that acquires and manages closed life and pension funds in Europe. In terms of red flags, they do have a couple. So you can see here on their financial health analysis, they have only passed 2 out of the 6 checks, and their liabilities, both for short term and long term, far outstrip their assets. They also have a very high debt ratio, but they are reducing their debt as well. The current estimate is that they are overvalued. So in terms of my own investments, I won't be investing into them because I think all of the financial health stuff is just a bit too much of a risk for me, even though they've had a stable dividend and a high dividend yield. The next one we're going to look at has a high dividend yield of 6.74%. This is a company called S&U. And if you haven't heard of them, you are not the only one, because I have never heard of them before until I did this research. So they provide motor and property bridging finance services. So again, a financial company. They have had a very stable dividend for the last 10 years and they are again in the top 25% of dividend payers in the UK market. In terms of financial health, it does look like their assets at the moment outstrip all of their liabilities, but they do have a very high level of debt once again. Having said that, it does seem like their debt is covered by the cash flow at the moment, so that is a good sign. Taking all of this into consideration, it's one that I probably would consider investing in, so I might add it to my watch list and do a little bit more research to see how I feel about it. It's one that I'm a bit borderline on, so it would need a lot more research, but at the moment it's one that I am interested in. Next, we've got everyone's favorite, or at least it seems like everyone's favorite, which is Legal and General Group. They are essentially an insurance provider that operates in the whole world, and they are a very well-known company. They have a very high dividend yield of 6.76%, which again is in the top 25%. I think you're gonna get tired of me saying that, but it is, and it's true. They have had a stable and growing dividend over the last 10 years. However, their red flag is that they do have a very high level of debt. Having said that though, their debt is covered by their operating cash flow, and they have reduced their debt to equity ratio over the last 5 years, so they are tackling their debt. In terms of their financial health, I think there's a couple of issues here, but nothing that I'd be too worried about. So their short-term assets cover their short-term liabilities, but they do have a lot of long-term liabilities that aren't covered by their short-term assets. Having said that, personally, this is one that I've been watching for a long time, and I definitely want to add it to my portfolio. So I think you will probably see it in some of my future updates. The next one is IG Group Holdings. So this is actually a trading company which offers things like CFDs and SIPs and ISAs and things like that. They do have a high dividend of 5.29%, which again is in the top 25% of the UK dividend payers. Their dividends have been stable and growing for the last 10 years as well. They have a high dividend coverage, which means that their dividends aren't really at risk. Their financial health seems great, their assets far outstrip their liabilities, and they have a very low debt to equity ratio. Again, my personal view from having this quick look through all of this is that I will be adding it to my watch list and potentially investing more into this as well. And I know I said 5, but I couldn't not add GlaxoSmithKline into my analysis, so the final one will be GSK. They do have a dividend yield of 5.74%, which you guessed is in the top 25% of UK dividend payers. They have had stable and growing dividends for the last 10 years, just like the others, and they do have a great dividend coverage as well. There are a few red flags with GSK, which is its debt. So their short-term assets do not cover their short-term or long-term liabilities, and they do have a massive debt to equity ratio. In terms of the valuation, it does seem like they are currently massively undervalued, so I'm planning to add to my position. Personally, I believe in the company. I don't think that, you know, the debt situation there is a big deal. They are a healthcare provider, so from all I know and all the analysis I've done, I'm personally going to be continuing to invest, and I think the next time I top up, considering the valuation, I will probably add a bit more. But of course, make sure you do your own research before deciding what you're going to do. I have recently purchased a subscription to Simply Wall Street. So if there are any sort of analysis videos that you want me to do going forward, using this website, let me know. I'll be more than happy to do this. You can of course use it yourself, but unless you pay, you only get 10 reviews of companies. So I got a bit tired of having to do all this analysis myself, so I bit the bullet and I actually got the subscription. So it means that I can do analysis videos a lot easier with a lot less fuss. So again, if there are any sort of more in-depth analysis videos that you'd like to see, let me know, and otherwise I will see you next time. Bye.